From the information given below of Messrs ABC, calculate the net profit. So there is a customer named some ABC. Now you have to calculate the net profit. What is given? Operating profit as 10 lakh. Admin cost as 2 lakh. Interest and tax as 50,000. What will be the net profit over here? Net. Net means what? After all the taxes are gone, everything is gone. It is called as NPAT. So what shall be the answer in this? Think over it. Is the answer 7,50,000? Is it 8 lakh? Is it 9,50,000 or cannot be determined? What should be the answer over here? Think, everyone. Yes, it will be. See, what is the net profit basically? What is the net profit? Net profit means whatever you get as a gross profit, from that you subtract all the admin expenses, administrative expenses. Okay? You will subtract all the admin expenses, and from that admin expenses, you will subtract interest, depreciation, all these things. And after that, what you get is known as a net profit. Okay? So here what will be the answer? Operating profit is given. See, firstly, gross profit, GP. Gross profit, first you gross. Okay, gross profit. From this gross profit, when you subtract, okay, the operating expenses, all these, admin expenses, all these. So then you get is operating profit. Okay, you get is operating profit. So minus admin expense, okay. Then you get is operating profit. Operating profit, or you call this as EBIT also, EBIT, EBIT, earning before interest and taxation. From here you subtract interest and taxation, interest and tax. Then afterwards you will get net profit, NPAT, net profit after tax. So this is the whole sequence. Okay? And this NPAT will be either given as a dividend, or it will be kept as R&S, reserves and surplus. Either it will be given as a dividend or it will be kept as a R&S, reserves and surplus. Got it? So now what is the answer? I have given you the formula. See, many of you have typed the answer as 7,50,000. But when you get operating profit, before that only, this 2 lakh is gone. So this 2 lakh is of no use for you right now, after you get this operating profit. So net your answer will be 10 lakh minus 50,000. So it is 9,50,000. Okay? This is the tricky one. Why is this important? Because you are doing housing finance, right? In housing you get many customers. You will get such balance sheets over there, isn't it? Among the following matches, which of the following is showing the correct match on the basis of beneficiary and their annual income for being eligible to PM Awas Yojana? Who is showing you the correct match? You want the match now. Correct match. Who is showing you the correct match now over here? MIG 1, 6 lakh to 12 lakh. MIG 2, 12 lakh to 15 lakh. EWS, 3 lakh to 6 lakh. LIG, lower income group, up to 3 lakh. Okay, means LIG to EWS. So it is up to 3 lakh. I am having the explanation on the next slide, but first I want to answer from you. Which one is showing the correct matching? Okay, think over it. Is MIG 1 6 lakh to 12 lakh? Is MIG 2 12 lakh to 15 lakh? Is EWS 3 lakh to 6 lakhs? Or is it this LIG up to 3 lakh? Think. See this. MIG 1, okay, 6 lakh to 12 lakh. Okay, MIG means what? Middle income group. MIG 2, 12 lakh to 18 lakh. So MIG 2 is 12 lakh to 18 lakh. LIG is lower income group, 3 lakh to 6 lakh. And EWS is up to 3 lakh. Now check this. Okay, now I've given you the explanation. Now check this. MIG 1 is what? 6 to 12. MIG 2 is 12 to 18. So now check this. MIG 2, 12 to 15. MIG 1, 6 to 12. MIG 1, 6 to 12. So which is the correct match over here? The correct match over here is only 6 to 12 lakh. MIG 2 is 12 to 18. Okay. EWS and these are reversed. So EWS is up to 3, LIG is above. Okay. So these are reversed over here. You can have a look at this slide again. Say this. Okay. Have a look at it. Kindly have more focus on MIG1 and MIG2 because this is a middle income group. This constitutes a major part of the economy. Okay. So 6 to 12 lakh MIG1, 12 to 18 lakhs MIG2, LIG is 3 to 6 and EWS is up to 3 lakhs. Got it? Move on. Next one. Among the following, which is not eligible for applying home loan, not eligible. Huh? Individuals should have regular income from agriculture. In case of employed persons, minimum 2 years of confirmed service is necessary. In case of self-employed personnel, minimum 3 years standing in respective field is necessary. In case of business persons, minimum 3 years standing in respective field is necessary. So who is not eligible? See, question is not eligible for applying to home loan. Yes. Who is not eligible? Or which is not a correct criteria. You can call it like this also, which is not the correct criteria. Can you think? Yes, it is. Minimum 2 years of confirmed service. Is this the correct criteria? You see many newcomers in IT, in banking, who have joined the bank. Just now they have joined. They got a confirmed job now. They are applying for the home loans. So do you say that no, after 2 years only you apply? Do you say no? So this is not the correct criteria. Okay, sorry, this is not the correct criteria. 2 years salary is not required. 2 years confirmed job is not required for home loans. Logic is also there. If I got a new job, okay, then will I wait for 2 years for getting the home? In 2 years, that housing valuation will go to where? The flat which is available for 60 lakhs after 2 years will be available for 70, 80 lakhs. So what do I do? Right? So generally what happens is this criteria is disposed of. Remaining all are there. should have regular income from agriculture. If somebody is a farming, okay? So then is in agri, then he must have a regular income. Self-employed 3 years, business 3 years, right? This generally we follow, okay? Dash tax is implied on sizable earning from the sale of property or investments. What is the name of this tax? Sale of property. If I sell any property other than agri, then which tax is applicable? Housing property, capital gains, security transaction and interest tax. Think which is applicable, everyone. Which tax is applicable? Yes? It is? Which is that? It's capital gains tax. Very, very, very important for you. Capital gains tax. Okay? Capital gains tax, many numericals are asked. Capital gains tax is applicable not only on housing, it's applicable on many things. I'll give you, see this. Capital gains tax is applicable to mainly 3 parts. Okay? Sale of property. Property means property. It can be a house also. House. It can be a house, or it can be a shop. Shop. But not the agri land. Okay? Then it is applicable to gold. Gold. Okay? The rules are different for gold and for this property. Then it is applicable to shares. Shares and equity mutual fund. Equity MF. Okay? So the rules are different over here. All the 3 rules are different. Gold and debt funds, they have the same rules. Debt funds, they will have the same rules. Okay? So this is the rule. This is the point. Okay? The rule is like this. For this it is 2 years. 2 years. This it is 3 years. And for this equity MF it is 1 year. Okay? So if you sell any property after 2 years, it will fall under long-term capital gains. If you sell any gold after 3 years, it will fall under long-term capital gains. If you sell any equity share after 1 year, it will fall under long-term capital gains. So this long-term and short-term bifurcation is very important. Long-term and short-term bifurcation is very important. Okay? Remember this. This is all for long-term. Now, as it goes in long-term, the rates are different. Immediately rates change. Okay? Now, these are again different for all these 3 separate. Capital gains rates are not the same for all of them. Okay? So these rates are different for long term. If you go for short term capital gains, then again the rates are different. This I have taken separately in the YT sessions, and I'll be taking it in the paid classes also. So follow it. Follow the paid classes. Join the paid classes ASAP. Okay? So capital gains is applicable for sizable earning from the property and the investments. The privileges that employer bestows on employees are taxed as well. They come under privileges means what? Which the employee bestows. Bestows means what? Privileges given by the employer to the employee. Canteen subsidy. Okay, canteen subsidy is given. Traveling allowance is given. Okay, something else is given, like the entertainment expenses are given by some companies. So these are all under which category? Is it under income tax, capital gains tax, security transaction tax, or perquisite tax? What are these, everyone? These are actually called as perquisites. These are called as perquisites. So that's why the tax will also be called as perquisite tax. Many perquisites are there. Means they'll give you ESOPs also. They'll give you canteen tax also, canteen benefit also. They will give you some DA also, daily allowance. Okay, they'll give you some traveling expense. Means employer will give you. All these will be under this perquisite. Okay. Among the below given, which of the following tax doesn't come under the category of direct taxes? Expenditure Tax Act, forget this act. Expenditure tax, security transaction tax, perquisite tax, customs duty and octroi. So which does not come under the direct taxes? Now what is the difference of direct tax? Which is the difference? What is the meaning of direct tax? Direct tax means which you pay personally by filling up the form. Which you pay personally by filling up the form. So what do you pay by filling up the form? What do you pay? Expenditure tax. Now this expenditure tax, you and me don't know, because why? We don't expend that much. There are certain guys who means rich guys. Those expenses are used, so they pay this tax by filling up the form. So here form is required. STT, it is directly you have to pay. Whenever you do the transactions, you have to pay that STT. Okay. Perquisite tax. Perquisite means it is to be paid by the employer. Okay. Customs duty and octroi. So what is customs duty and octroi? Customs duty is for exports. Whenever you do some exports, you have some customs duty. Now that is not to be, you don't fill it directly. Customs will charge them direct on their own. You don't have to fill up the form. So this is the one which does not fall under the direct tax. Customs duty and octroi. Whenever you do any export, at that time also customs duty is there. Whenever you do any import, at that time also customs duty is there. Okay, for both export and import, both it is applicable. A firm with high net margin effectively controls both its running and non-running expenditure. Dash might be the result of low income from low interest payment. So a firm with high net margin effectively controls both its running and non-operating expenses. Full stop over here. Dash might be the result of low income from interest payments. Now, frankly speaking, first sentence and second sentence don't have any relationship. Even if I ignore this first sentence, then also second sentence carries a meaning. Dash might be the result of low income from low interest payments. So if I get low interest payments, income from low interest payments, if I get the low interest payment as a bank from the loans, what will it result in? Decreased net margin, increased net margin, greater gross margin, lower gross margin. Interest payment is reduced. Interest payment. So it will result in interest. It will result in, what will that result? See, the only point is between this and this. These two. These two are obviously no. Right? So either decreased net margin or lower gross margin. What will it result in? Low interest payment. Loan payment comes under what? Loan payment comes under what? It comes under your this gross, because that is the main income of yours, isn't it? That is the main income of yours. So this will lead to low gross margin. Okay? Yeah. Low gross margin it will lead to, because that's a part of your trading account. That is the main business of yours. Okay? Dash citizen is an individual equal to or more than 80 years of age. Any citizen who is more than 80 years of age is called as what? individuals, senior citizens, super senior citizen, and taxpayer. So what is it called as? It's called as super senior citizen. Super senior citizen. Okay. Super senior citizen. That is the answer. What is the maximum tenure allowed for reverse mortgage loan by banks to senior citizens? Reverse mortgage loan. What is the reverse mortgage loan? See, reverse mortgage loan is opposite of your regular mortgage. Okay. In regular mortgage, the customer pays back the loan. In reverse mortgage, the customer does not pay back the loan. Customer takes the loan, then after the expiry of the customer, after the customer dies, this property is sold by the bank and the loan is recovered. This is reverse mortgage loan. You can study in deep over here because otherwise it will take a lot of time. That is the basic logic of reverse mortgage. Bank pays to the customer the loan. It doesn't pay full amount. It pays in installments. So logically remember, this loan is for senior citizens above 60 years who don't have other income. Senior citizens above 60 years who don't have other income. That is very important. Otherwise, there are many senior citizens who are doing business, right? So it's not for them. So coming back to the question, what is the maximum tenure allowed for reverse mortgage loan by banks to senior citizens? 20 years, 10 years, 25 years, 15 years. Think. What should be the answer? Yes. It is 20 years. Okay, maximum loan tenure is 20 years. Got it? 20 years. Okay. Next. Equitable mortgage intent letter is obtained from. Equitable mortgage intent letter is obtained from. So it is obtained from whom? Equitable mortgage intent letter. Now what is intent basically? Intent means I have to do the mortgage. Who will give the intent then? Bank, borrower, sub-registrar or legal advisor of the bank. So it is obtained from whom? Give me in the comment section. Let me see. Equitable mortgage intent letter is obtained from. Yeah, it is from borrower. Intent. This is my property and I want to give the mortgage. So obviously I'll be required to give this intent letter, isn't it? So importantly remember, intent is given always by the one who is doing the mortgage. Okay? Got it? Next. What does acronym LTV stand for in context of mortgage? What does the acronym means short form. LTV stands for loan to value ratio, loan to tenure valuation, loan to lender's total value and leverage total value. What is the question? What is the answer over here? This we generally use it, isn't it? In all the loans we use this. LTV ratio. LTV ratio is 80%, LTV ratio is 75%. Means what? Loan to value ratio. What is loan to value ratio? See this. Suppose if my property is of 1 crore, how much loan can the bank give? Suppose if I am bringing LTV ratio is in all the loans. Anywhere I am doing the mortgage, there is a LTV ratio. Okay. So coming back. So if the value of my, let's say I am getting a home loan. So what is the value of that house versus what is the loan given? Now RBI has given 3 conditions in LTV ratio. Kindly note this. LTV ratio, RBI has given 3 conditions. What are the 3 conditions? For loans up to 30 lakhs. Okay, up to 30 lakhs, you can use the LTV ratio of 90%. Okay, 90% up to 30 lakhs. 30 lakhs to 75 lakhs. Loan, this is loan. loan amount, okay, and this is LTV is over here, LTV, I'll just cut this, okay. So loan and LTV ratio. For loan between 30 lakhs to 75 lakhs, I can use the LTV ratio of around 85%. And for the loan above 75 lakhs, I can use the LTV ratio of 75%. These are the LTV ratios given by RBI as a thumb rule to all the banks. See, thumb rule. RBI will not give you strict, because there can be a specific case where you have to give the higher amount. Suppose, let's say there is a big customer of mine, okay, of some bank. Let's say I am the MD of a bank, and there is a big customer. He wants to buy a flat of, let's say, 1.5 CR. Okay, 1.5 CR. He wants to buy a flat. So I'll say, see this, 75%. Now this customer is a big customer having many relationships with my bank, having some FDs, some investments, some CASA deposits, huge. So in that case, I have to go beyond the 75%. So I can go, subject to special approval from the board of directors, okay, or whichever is the authority given in the bank, okay. So case to case basis it can vary, but these are the general thumb rules given by RBI that you have to follow these generally, okay. Exceptions are allowed. So coming back, next question. So LTV stands for loan to value ratio. Which of the following mortgage types is characterized by a stable interest rate throughout the loan term, providing predictable monthly installment? So stable interest rate throughout the loan term. Adjustable rate mortgage, fixed rate mortgage, usufructuary and reverse mortgage. Fixed EMI you are having. Obviously simple answer, isn't it? The answer is fixed rate. Fixed rate loans, isn't it? Nowadays, even in variable rates, you can have the EMI same. But what happens? Understand the difference between fixed rate and variable rate. Okay? In fixed rate, you fix the rate. That this is the rate for your entire tenure. Whatever happens to repo, that's a separate question then. If repo falls down, I'll give the lower rates for others. Then also you will have to pay the same rate, because you have taken a fixed rate loan. Floating rate means this is adjustable rate. Adjustable or floating, one and the same thing. So in floating rate, what happens? If the repo rate goes down, my ROI will also go down. Okay, ROI will also go down. So if my ROI goes down, many times what does the bank do? Bank gives two options. One is either you reduce the EMI and keep the period same. Or second option is keep the EMI same and reduce the period. Both the options are available. Okay, so that's in floating. So fixed rate is simple, same, everything. Okay. Which of the following is a primary characteristic of an equitable mortgage? Primary, important characteristic of equitable mortgage. See, equitable. What is equitable mortgage? Firstly, understand the difference. What is equitable? Yeah. So which is the primary this? See, first one, let's read. Formal registration of mortgage deed at sub-registrar's office in equitable mortgage. Physical transfer of properties title deeds to the lender as collateral. Transfer of ownership of mortgaged property, okay, to the lender. Mandatory requirement of written and registered agreement. So which of them is the primary characteristic? Which of them is the primary characteristic over here? See, registration is not there in sub-register in this equitable mortgage. It is not done in equitable. Okay. Physical transfer of properties, title deeds to the lender. So physical transfer is not done. Always remember, title deeds are always in the name of the this borrower only. Suppose if you buy a flat and you take the loan, so the name of yours is means on the property documents the name is yours only. Bank is shown as a borrower. So physical transfer of property's title is not happening in any mortgage. Forget this equitable mortgage. So this is also out. Transfer of ownership of mortgage property to the lender. Transfer of ownership. See, these two are same. Okay. So this is out. All these three are out. Mandatory requirement of written and registered agreement. Compulsory. Without this you can't have a mortgage, isn't it? Got it? So without this can you have a mortgage? No, you can't, isn't it? Equitable mortgage, understand the difference between registered and equitable. Registered, there are two types of mortgages. Registered, mainly, here. To be frank, there are actually many types of mortgages. But main difference I'll tell you. One is registered, second is equitable. In registered, you have to go to the sub-registrar office. See this part, formal registration, this is done in registered mortgage, A part. Whereas in equitable mortgage, you don't have to do any registration at sub-registrar office. But nowadays, what has been made compulsory, that if you do the equitable mortgage, at the month end, every month end, you have to give a notice to the sub-registrar, local sub-registrar, that these mortgages I have done, equitable mortgages. Now you take a notification of the same. So he'll keep a record of the same. Some fees is paid for that. That is to be done within 30, means once you do the mortgage, immediately in next 15 days you have to inform. Means after the month end. Okay. The list of all the mortgages is given. Got it? In that month. Which of the following is a potential disadvantage of an equitable mortgage from lender's perspective? Lender means bank. Bank's perspective. Potential disadvantage. High processing cost due to formal registration requirements. The borrower does not retain the possession of the property. Increased risk of fraud due to lack of public registration. Difficulty in enforcing foreclosure in case of default. Think. Which one? Disadvantage. You want a disadvantage now. Which one is a disadvantage? Yes? Think of it. See, first one. High processing cost due to formal registration. Do you register in equitable? Isn't it? You don't. So this is out. First one is out. The borrower does not retain the possession of the property. Does not retain. He retains. The borrower, the name on the property is of the borrower only. This is also out. Increased risk of fraud due to lack of public registration. This can be in. You don't have a registration. So if the borrower is doing a big fraud, many a times you won't come to know. Okay? But nowadays we have various methods of checking. Okay? Nowadays everything is online, so you can definitely go and check through various documentations. But earlier it was, this borrower could do a fraud in equitable mortgage because there is no registration of equitable mortgage. Right? So that's why there can be a fraud. So this is the one answer. Difficulty in enforcing foreclosure in case of defaults. It's not there. Let it be any type of mortgage. Courts have given the clear jurisdiction that once it is a mortgage, let it be equitable or let it be this registered or anyone. Bank has a right. If it's a default. Okay, so this is also out. Only this is in. Increased risk of fraud due to lack of public registration. This is in. Okay. What is the primary purpose of property sale deed in the home loan application process? Means why do we require the sale deed between the borrower and the builder? Why do we require it? Okay, either between the builder or if it is a second hand flat, then between the first seller and the borrower, anyone. So why do we require the sale deed? Simple. To show the property's market value, to confirm the absence of any legal dues, to legally transfer the ownership of the property, to verify the property's construction quality. Why do you require the sale deed? Yes. See this. Property's market value. Where do you get it? Property's market value, you get it from the valuer's report. On agreement, I can write anything. Suppose if there is a seller and I am a buyer, I can buy a flat of on agreement of let's say 40 lakhs. I can buy it for 1 crore. Who can stop me? It's after all the buyer and the seller. But we as a bank need to know the valuation, real valuation. So this you get it from the valuer's report. Valuer's report. Okay. To confirm the absence of any legal dues. This also is not there in the agreement. This you get it from search report. Search and title. Search report. Okay. To verify the property's construction quality, D1. How can you verify? You can verify it from the agreement, isn't it? For this, you will be needing a separate technician's report, isn't it? If you want to verify. So this is also out. So only in thing is this. To legally transfer the ownership of the property from the builder to the borrower. Okay? To legally transfer. So that is the answer, isn't it? Got it? Getting the point, everyone? See, these two reports, valuer's report and search report, are very much important. Okay? Valuer's report gives you the idea what is the present cost in that area. Now, if I have done an agreement for let's say 1 crore rupees between the buyer and the seller, see this, there is a buyer and there is a seller. So suppose if we do the agreement of 1 CR for any flat, will you finance 1 CR? If the valuation report, valuer tells the flat's cost is let's say 40, 50, 60 lakhs and I am doing the agreement for 1 CR, will you finance me on 1 CR or 60 lakhs? Of course, on 60 lakhs, isn't it? Lower of these two. Got it? So that's the importance of valuer's report. And search report, encumbrance. Encumbrance means whether there is any legal dues, whether somebody has claimed the right on that property. All these things are through search report. Okay? Next. Which of the following documents is typically required from the self-employed individuals to prove their income for a home loan? So self-employed, which of them is required from the self-employed? Okay. Form 16, latest salary slips, income tax returns for last 2-3 years and employment confirmation letter. Self-employed. Self-employed. So the answer is, for self-employed, the answer is ITR. Okay, ITR, income tax returns. See this. For salaried, you can have all this. Form 16 is there, salary slips is there, employment confirmation, that is all there. But if I am a shopkeeper, simple shopkeeper, I am having a huge sale, but I am a shopkeeper. Who will give me the Form 16? No one. Isn't it? ITRs. Okay? Got it? Next. What does encumbrance certificate, EC, indicate in context of property documents for home loans? What does encumbrance certificate? Encumbrance. Now the other name for encumbrance certificate is search report. Encumbrance means what? If somebody is claiming on that property, that's encumbrance. So other name for this is search. Search and title report we call it. Right? Just now I told you. So what does this search report or encumbrance certificate in context of property documents give? What does it signify? signify? The property's age and construction, the market value of the property's freedom from legal dues, claims and outstanding loans, the history of property ownership. What does it signify? What does it signify? Yes. In fact, the answer can be E over here. E. C and D. C and D. See, property freedom from legal dues, claims and outstanding. So this will be given. And history of property's ownership, that is also given. But this history is given for, as per the rules, it is 13 years, 1-3. 1-3, 13 years it's required. Okay? Because there is a law of limitation of 12 years, right? That's why this 13 years report is required. Got it? Clear? If a property is a part of housing society or built by a developer, what document might lenders require to confirm the seller has cleared all the dues with the society or the builder? Means if I am purchasing a flat, second-hand flat, let's say, from a society, in a cooperative society or any housing society, then which document will prove that the seller, whoever is selling me, has cleared all the dues? Property tax, occupancy certificate, NOC from the society or possession? Obviously, isn't it? What is the answer? Yes, what is the answer? The answer is society, NOC, isn't it? Society will give the NOC that he has paid all the dues of ours. They will specifically speak of the society. Tax received and all these things are related to the local bodies, municipality or whatever it is. So that is not covered under this NOC. Only society dues are covered over here. Okay? Why is it crucial to submit a detailed estimate of construction costs when applying for home loan for an under construction or self-built property? Means, suppose if I am purchasing a under construction flat, means the construction is going on right now and I am purchasing that. So why is it compulsory to submit a detailed estimate of construction? Means that builder the estimate, I must get it. Of the flat, specifically of the flat, let's say. Or if I am constructing I am buying a land and then constructing my own house, then why is the estimate required? To assess the borrower's artistic preferences. What is this artistic? To help the bank determine the loan amount to be sanctioned. To verify the number of rooms in the property. To check the unauthorized construction details. Simple, isn't it? To help the bank determine the loan amount. Okay, from here we check the loan amount. What is crucial document for home loan, especially for apartments, that confirms the building's compliance with the approved plans and safety regulations and certifies its health, legal stability, you can call it, legal ability or stability. So, which document will prove that the compliance with approved plans, everything is there, property tax, encumbrance, occupancy and sale agreement. Which document will give you the idea that all the compliances of this, of the sanction plans, of this FSI, all have been done. So it will be proven by occupancy certificate. Okay, occupancy. Which of the following is not typically considered a basic element for value in property valuations? So not considered as a basic element. Not, kindly note the question, not considered. Utility, scarcity, transferability and cost. Basic element of value in property valuations. Basic element of value. Which is not considered, okay, utility, scarcity, transferability and cost. Not considered, tricky, very tricky, very tricky. Many of you will fall in this trap now. Think. Cost will be there definitely because cost is there. Money, isn't it? Cost will be there. Then transferability, that we don't know here. It will be it. What is there in transferability? So this will not be there, isn't it? Many of you are thinking this way. Remember, which is not the prime importance is cost. Cost is different than value. Cost is different than value. Okay, kindly note. It is not that important. These three things are very important. Utility. Suppose let's say you buy a house and it's of no use for you. What's the use? Means why did you buy it then? You can't give it on rent, you are not staying, it's just locked. Scarcity. Abundant houses are available. What will be the cost? Means the price of this down. Transferability means I can sell that house. Some property litigation is there. What's the use of that house? Whenever you consider value, these 3 points are of ultimate importance. Cost is not that important. Understand the difference between cost and value. And shall I give you a simple example? Okay. Okay. Your, let's say, photograph in your family. Some family photograph. Good one. Old photograph which you like the best. That photograph's cost, if you consider. Suppose if I consider what is the price of this photograph. Cost. Hardly it will be 100, 200 rupees, isn't it? But what is the value of this photograph? Huge. Right? Means it's beyond the valuations. So that is the meaning. Okay? Wedding ring. Cost, value. Or Mangal Sutra to females. Cost, value. Isn't it? The method of property valuation that involves comparing a property to the similar properties that have recently been sold, okay, in the area, making adjustments for differences is called as, very important one, similar properties sold at what rate? Okay, this is used in your urban lands. Okay, urban lands. So cost approach, income capitalization approach, sales comparison approach, residual approach. Which is this approach? Which is used similar properties, comparing. My neighboring flat was sold for 80 lakhs. So I'll also sell it for 80 lakhs. Simple. That is sales comparison approach. In this, you always compare the properties. Okay? Got it? Sales comparison. Income capitalization is separate, cost approach is separate, residual is altogether separate. That is used in depreciation. In context of property valuation, the capitalization rate, cap rate, is used primarily in capitalization. Where do I use the capitalization? Means benchmark, then the income which it will generate. See, ultimate meaning of capitalization means what? Income it will generate. Income it will generate. That is the meaning of capitalization. Okay? Income it will generate. That is known as capitalization. How much income? Suppose if I buy a flat and give it on rent. So how much rent will it get? So that is my net income. So suppose if I want to sell that flat, I tell the customer, see, the rent over here is 15,000 per month, 25,000 per month. So immediately it starts. That is income capitalization approach. How much income am I getting from that property? That is important. Okay? Income capitalization. Sales comparison already done. Cost approach. What is this cost approach? 2 times it has come. Cost approach. Cost means pure cost. Cost of this pen. Different. I gave you that example. Photograph. Cost of the photograph. Hardly something. Value of that photograph. Huge. Okay? Which of the following factors would likely decrease the value of the property? Decrease. What will decrease the value of the property? Suppose if you are buying a flat or some house, near there is a huge depot. What we call it? Garbage depot. Near that plot only, near that building, flat, there is a huge garbage depot. Will you buy it? There is a huge canal going on, dirty canal, all. Will you buy that? So what will decrease the value of the flat or property? Proximity to excellent schools, high property taxes, strong local economy and job growth, recent renovations and upgrades. What will decrease? Decrease. It's not increase, decrease. Proximity to excellent schools. So that will increase or decrease? That will increase the value, isn't it? Proximity to malls, shopping malls, it will increase. Proximity to the job, it will increase. Look at IT parks, various IT parks, and the flat cost near that IT park. Huge, isn't it? So increase, this will increase. Strong local economy and job growth, increase. Recent renovations, I have made a renovation, painting, so that will increase. This will decrease. High property taxes. If the taxes are heavy in any area and I want to purchase that property, first what will I think? Yearly profit, yearly taxes are this much. Isn't it? I'll think it that way only. So this will decrease. This is the right answer. B. Okay. The value of the property building at the end of its utility period without being dismantled is called as end of its utility period. This is mainly used in depreciation. This is mainly used in depreciation. What is the answer for this? Yes? Let me see in the comment section. The answer is salvage. Market, book, distress, salvage. Salvage value. Okay. What are remaining three? Remaining three. Market value. Market value means what is the property right now selling at? Similar property selling at what rate? Book value. Book value means what? See, understand the meaning of book value. Book value means core value, inside value. What is the book value in, let's say, here, let me discuss only of property. There are book values are of various types. Book values are there in shares also. Okay, shares also or bonds also. Book value is there in property also. If I consider the book value in property, what is the book value consist of? Book value means, say this, land cost, kindly note, land cost plus construction cost. Construction cost. Okay. So land cost plus construction cost. This is known as the book value. Okay. So whatever I am, suppose if I go and purchase a land over there, wherever I am purchasing a flat. So how much will it cost me? If I start building a house on that, how much will it cost me? So together this cost versus the cost of the flat. That is book value. Distress value. I have to sell in distress. I have to move out. Distress value. Okay. I have to move out. See, my job is transferred. I have been transferred somewhere. Now I have to go there urgently. I have to sell this flat. What to do? How? Distress. Okay. So the answer is salvage. According to section 6 of Transfer of Property Act, which of the following properties cannot be transferred? Cannot. A future property, a debt due, a public office, and agricultural land. Which of the property cannot be transferred? Yes, which of them cannot be transferred? Future property, a debt due. Debt due means what? Debt which is due. I have to pay it to somebody. Debt due means I have to pay it to somebody. Public office means some office of government office. Can it be sold? Can government sell that public office? Think. I won't give you the answer right now. Agri land. Can it be sold? Transferred? Think now. Give me the answer accordingly. It is debt due. How can I transfer a loan? I have taken the loan. Now I want you to pay that loan. How? Not possible. The remaining all things can be transferred. I am going to future property. What is this future property? Many of you might have got confused. What is this future property? I am going to get a property after, means in future next 6 months, let's say, my grandfather has written some will, and in that will he has given me a property which I will be getting it in next 6 months. But I don't want that property. I want that property to be transferred to my brother, son, wife, anyone. So transferability is there for future property. Even though I am going to get it in future, I can transfer it right now. Allowed. Public office. Why can't the government sell it? It can. Transfer it. Again, agri land. You can definitely sell it. Agri land can be sold. Isn't it? On the receipt of applications and details from the branches, RLPCs undertakes which of the following steps? What is RLPC? RLPC means the processing centers. CPU we call it. Okay? Retail loan processing centers. Retail loan processing centers. So they undertake which type of activity? You read this first. They do the valuations. Okay? Then they obtain that encumbrance certificate. Right? Through lawyers. Encumbrance means we call it search and title also. Search and title report. Obtain the legal opinion from panel lawyer and all of the above. So what will CPU do? CPU means this processing center do. Will it do only one of these three or all of them? What will it do? All of the above. Not only these three, there are many things which are to be done. These three are just a part of this. See, valuation report is important. Whenever you want to give a loan, very simple logic. Valuation report, search and title report, this encumbrance, legal opinion, okay? Visit, very important, visit is important. Where visit should be done? Visit should be done at 3 levels, 3 places. Kindly note, in any loan, specifically in home loan, 3 places visit needs to be done. Where? Number 1, office means work. Work, present residence, and collateral property, collateral or whichever property is given. So you have to make the visit at these 3 places. All the 3 should be done. There is no other option. Got it? There is no other option. All the 3 should be done. Got it? So the CPU will do all these activities. Clear? The cost of a two-wheeler is 70,000 numerical, and it's purchased and the salvage value is 10,000 at the end of 6 years. The amount of depreciation on the two-wheeler for the second year using SLM, SLM means straight line method, is, firstly understand, in RBWM we are having 2 methods. One is SLM and second is WDV, written down value. SLM and WDV. Now I won't show WDV. WDB, written down value, both of them. Okay, straight line and WDB. So, what is SLM? Kindly understand the meaning of SLM. In SLM method, SLM, okay, there are 2-3 important points. One, the amount of depreciation is always constant. Constant means what is there for first year will be the same for second, third, fourth, fifth, sixth. All the years amount of depreciation will be constant. Percentage of depreciation changes. Very important point. Again, amount of depreciation is constant. Percentage of depreciation changes. End value, end is equal to salvage value. You must always get salvage value in SLM method. In WDB, it's totally different. Percentage is constant, amount is different in WDB. Salvage value has no meaning, zero value in WDB. It will never match. So now let's solve. Easiest, very easy. Straight line is very easy. It's similar to your, simple interest. See what is given. Shall I rub this again? Noted down all these 3 points. Amount of depreciation constant, percentage changes, and salvage value will be the end value. So now let's solve this. What is given? 6 years is given. 6 years. And 70,000 is the cost and 10,000 is the salvage value. So net how much has it depreciated? See, depreciation, total depreciation. Total depreciation is equal to cost minus salvage. So that is equal to 70,000. I'll just write short figures now. 70 minus 10. So that is equal to what? 60,000. 60,000, right? So net is 60,000 depreciation. But what do you want? You don't want the total depreciation. You want the depreciation for the second year. What did I tell you? Depreciation amount is constant for all the years. So how many years are there? 60 years. 6 years. What is the amount? 60,000. So per year will be what? Depreciation per year equals to what? 60,000 divided by years. So that is equal to 60,000 upon 6, 10,000. Right? That is the answer. Got it? 10,000 will be the depreciation per year. Got it? Everyone clear? A bank deposit of 25,000 will earn interest at the end of 1 year. If it earns 10% compounded half yearly, the value at the end of the year will be what? See, you have put money in that bank. Now this bank will give you after 1 year only. But it will compound half yearly. What is this? 25k? 25 over year. Then what is ROI? 10% per annum compounded half yearly. So here it will be 5%. Here it will be 5%. Again. And you have to find out the amount over year. This is the question. Value at the end of the year will be what? Here we are doing the compounding in between. So whenever you are doing compounding in half yearly, your R will always R equals to whatever R is given upon 2. So 10 upon 2. That is equal to 5%. And your N period, N will always be equal to how many, what is the total period? 1 year. 1 year. So your N will always be equal to into 2. 1 into 2. Whatever number you divide for R, Same number you will multiply to n. So 2. So now you want the amount at the end of the year. So this will be, you will get it using amount formula for compound interest. So A equals to P into 1 plus R raised to n. A equals to P into 1 plus R raised to n. What is P? 25,000. 25,000 into 1 plus, what is R now? New R. 0.05 raised to n. What is n? 2. Solve this. So 25,000 into 1.05 raised to 2. Get the answer, everyone. Check, everyone get the answer. Fast. What is it? What is it? First get the answer for 1.05 raised to 2. What is the answer for this? 1.05 raised to 2. So the answer for this is this answer specifically. So 1.1025. This is your answer for this. Multiplied with 25,000. Now get the answer. So it is 25,000 into this. Get it? It is? What are you getting? Comment section. Comments. It is 27,562. 27,562.5. This is the amount you are getting. 27,562. Right? So the value at the end will be this. Okay? This is, what is this given then? This is the increase. What is the increase over here? So in exam, this answer will be given to you. Value. If they want the increase is what? This minus 25,000. Subtract it. So what is the answer you will be getting? 27,562 minus 25,000. So it is subtraction 2562 D 2562 increase. So what is the value? Increase in value. I'll write it increase in value. Increase in value at the end of the 1 year. So increase in value is 2562.50. 25,000 I had. Now I am having 27,562. Okay. Anything can be asked in exam. Increase in value or value. Got it?